Buying privately is one of the riskiest ways of buying a car. If something goes wrong with it, you don't have as much legal protection as you would if you'd bought the car from a business.
Hello and welcome to the Cost of Living newscast from Kent County Council. In this episode, our journalist Elizabeth Matsangu is speaking to Kent Trading Standards Officer Claire Robinson and Adrian Daly from the Finance and Leasing Association about buying a second-hand car safely and what finance options are available. For more advice and tips, click the subscribe button below, follow Kent County Council's public protection or business advice accounts on social media, or sign up to receive scam alerts or business bulletins by email. Links below.
Hi Claire and Adrian, thank you for joining us today. So Claire, what rights do individuals have when they buy a second-hand car?
For many people, buying a car is one of the hardest financial outlays we have to make. So it's a big decision and one that's worth putting a bit of research into. We do have rights to protect us under the Consumer Rights Act. The Act sets out that many people can expect goods that they purchase from a business to be of satisfactory quality, fit for purpose, and as described. This applies whether you're buying a new or used car and whether you're buying a new car from a main dealer or a second-hand car from a business. If you buy a car and it turns out to be faulty, then you have rights to redress. However, it depends on a number of different factors as to what rights may apply. The Consumer Rights Act sets out the first 30-day right to reject rule. So if you purchase a car and it is or becomes faulty within the first 30 days of ownership, you can ask to reject the vehicle for a full refund. If it's after the first 30 days, the trader can offer a repair or replacement. If they are unable to repair or replace the vehicle, then you can either look for a price reduction, which is money back to cover the fault, or you can opt for your final right to reject, which would be refund minus the amount for usage for the time you've had the vehicle. You only have to accept one repair or replacement. You don't have to keep having the vehicle repaired over and over again if the repairs aren't working. However, you can also negotiate with the garage, because if you can negotiate the outcome you want, then that's better. But your rights are there to protect you if you need them.
And do these rights differ if they buy a car privately instead of, say, from a car dealership?
Yes, buying privately is one of the riskiest ways of buying a car. If something goes wrong with it, you don't have as much legal protection as you would if you'd bought the car from a business. Privately, the car must match the seller's description, be roadworthy, and the seller must have the legal right to sell it to you. In other words, the car must work, meet the legal requirements for being driven on public roads, and be owned by the seller. But you're responsible for ensuring the car is of satisfactory quality and fit for purpose before you buy it. So it's very much buyer beware for private sales. And watch out for unscrupulous sellers pretending to be private owners so they can avoid your rights. So sometimes they try and offload faulty or stolen cars. So it's important to watch out for, be sure who you're buying from if you're buying privately.
Are someone's rights affected if they buy a car using credit or a loan?
Well, credit is a very complicated area of finance for cars, but also very popular, as most people will need to take out some form of finance in order to purchase a vehicle. There are different types of credit agreements you can get, but it is advisable to seek advice before you enter into an agreement, because car finance often comes with higher rates of interest. So you need to be sure how much you're going to be paying back overall, and that option is the right one for you. Because there are other options, if you wanted to go down that route. Your rights will be different depending on what finance agreement you take out. In a lot of cases, the finance company will be the owner of the vehicle until you finish paying for it. This can make finance agreements quite complicated, as there are three parties to the contract: the buyer, the seller, and the finance company. So I would advise to seek advice from a citizen's advisor or an independent advisor if you're thinking about or have taken out finance.
Adrian, can you tell us, what is personal contract purchase finance and how does it differ from hire purchase?
Well, there are two common types of car finance at the moment. There's hire purchase and there's personal contract purchase. They're both roughly equally popular. Personal contract purchase, or PCP, tends to be for newer used cars, and HP or hire purchase for older used cars. The most familiar of the two historically is HP, hence the phrase HP is in the language. And it is exactly what it says, it's hire purchase. So as Claire has said, with hire purchase, you're hiring the vehicle from the finance company who own the vehicle until you've made your final payment or final purchase, and then it belongs to you. So a hire purchase is a relatively simple loan, which is suitable if you want to keep the car in the long run. So you hire it for typically 3 or 4 years, a standard monthly payment that doesn't change when interest rates go up. And then if you get through to the end and you made your final payment, you then own the vehicle forever. It's yours. With PCP or personal contract purchase, you've got more options. What you're paying for throughout the length of the agreement, which also tends to be 3 or 4 years, you're effectively paying for how much the car loses value in that time. So that means you're paying less per month than it would be under HP. But what you've got at the end of your agreement is options. You can buy the vehicle in the long run, but that can be quite a substantial payment because you'll be paying what the car is worth at the end of the agreement, and that's called the balloon payment. Alternatively, you can simply hand the car back. You've met all your obligations under the agreement, you hand it back to the finance company, and you can then you then have nothing to pay. You can take out a new PCP or no agreement at all and no car. So you've got those options. PCP is popular because of those options, but if you're thinking of keeping the car in the long run, after the end of your finance agreement, is not that suitable unless you can afford that balloon payment, which can be quite substantial. So in that situation, as Claire says, do get some advice about what's suitable for you. But as a rule of thumb, if you're happy about paying a standard monthly amount as part of your household budget in the long run and changing your car every 3 or 4 years, then PCP is suitable for you. But if you want to only have a finance agreement for a temporary period and own your vehicle in the long run with nothing further to pay, then HP is typically the better one for you.
And if someone has a lease agreement in place, can they keep the car at the end?
No, is the answer to that. Essentially, to find out whether you've got a lease agreement, have a look at your agreement. And if it says lease or contract hire or hire, then it's the same thing. Basically, it is, as with leasing or hiring anything else, you take out your lease or hire for a fixed period, and then you hand the vehicle back at the end of that, and you have no option to keep it. So only take out a lease or hire if you know you're going to hand the vehicle back and you definitely aren't going to keep it in the long run.
Adrian, what can people do if they sign the finance contract, but then they get home and realise they can't actually afford it?
Well, it's an increasing issue now for obvious reasons. There is a lot of difficulty out there, and customers will find their finance companies and the dealers are asking more questions of you before you take out a finance agreement to ensure that you can afford it. But equally, you might, as you say, go home and find on reflection you can't afford it. There is a cooling off period, and you should use that. But if in doubt, when you get home, simply go straight back to the dealership or the finance company and say, I don't think I can afford this. And you do have a cooling off period, and you should be able to get out of your contract.
What should someone do if they still have finance on their vehicle, but they're struggling with the payments?
If you're in that situation, it's very important that you talk to somebody. The simplest first thing you can do is talk to your finance company, have a look at your agreement. You should be able to ring somebody up immediately, one call, or if it's online, make one click or make a phone call, and you can speak to someone who can tell you exactly what your options are. As Claire has said, there are options in a finance agreement to terminate before you get to the end. There are some important facilities you've got there, and you can use them. Your finance company will be able to tell you exactly what those options are. What a finance company can't legally do is advise you on which of those options is best. And as Claire has said, to get advice on which of the options is best for you, you can talk to Citizens Advice or other advisors who can look at your circumstances and advise you of the options available to you. This might be the best one. But the options available to you can be quite varied depending on what your options are. There is an option to terminate, which does involve handing the car back. But there are other options which are actually more common, which might be, for example, to extend your agreement and reduce the monthly payments to make it more affordable within your budget. That's quite frequent. Sometimes you can have payment holidays or payment deferrals for a while if you've got a temporary one-off cost. All those options are available, and if you speak to a finance company first, they can advise you what options are available and ask you to consider what's the best option for you. But it is important that you do that early, before you miss a payment, because missing a monthly payment does have consequences. All of us have credit files, And those credit files are kept to judge our ability to pay back credit. So if we all keep paying our monthly payments, everything's fine. You have a good credit score. But if you miss payments, that affects your credit score, and that makes it harder to get finance later, and the price of that credit might be higher. So it's very important to speak to someone before you miss a payment. And if you do that, it can happen very quickly, to find out what the options are and put them into practice, and decide what you want to do. And that can happen before you've missed a payment, in which case you're okay on all those scores.
We can't take action without your reports. We need everyone who comes across them to speak up and report scams and criminals. Even if you've seen a scam many times before, your reporting can help us target our resources and warn and protect others. If you have information on doorstep criminals, counterfeit, fake or illegal goods, illicit tobacco, loan sharks or underage sales, contact the charity Crime Stoppers on 0800 555 111. You'll stay 100% anonymous, always. To report scams and get advice on consumer issues, call the Citizens Advice Consumer Helpline on 0808 223 1133. Thank you for helping us protect Kent from scammers and criminals.